Okay, what I'm going to do is just run through a big picture market view and have a helicopter view of where we are in the markets now. I'll be talking primary trend mainly. This trend model tells us what the primary trend of all these markets are doing. As you can see, things like gold are up. Nasdaq's the strongest market. It's trying to hold into a primary bullish sort of market phase. It's the last man standing in a way. One market does not make a trend, but all trends do start with one market. So, this one's just hanging in there at the moment. And basically, we're ticking on empty. Small caps, large caps, Europe, US is the most bullish, obviously. And most of that is just price action. It's just because we've had a strong bounce. The dynamic sort of trend is ticking on empty. US and UK together, 13% bullish. This gives me, my heat, what I allocate to the market, maximum of 10% heat, is basically, 8.8% short heat, 1.3% long heat. So basically it's just telling, this trend model cannot be wrong. It's set up for its primary time period, and it will always be right. It just can't be wrong. It's based on price action. If the price action gets better, it will move up. If it gets worse, it will move down. Could it go to zero? Yes, it can go to zero. There is absolutely no bullish criteria being met for any of the markets I follow. It can go to zero. So at the moment, it's ticking very, price action, trend, absolutely. The tanks are empty at the moment. So what are we kind of looking for? Well, in fact, before I just go into that, I'll just jump into the sectors as well, and we'll just do the same thing. Some of these sectors, what are trying to hold up, defensives, yes, if we go lower, they will roll over too. Some might hold up, the occasional one, but, predominantly we are absolutely ticking on empty. Just a few defensive sectors holding the whole thing up. Technology's trying to hang in there. So, electricity, electronics, food and drug, just a few what are trying to hang in there on the primary trend. So I'll move on from that. So what do we need to see? Straight away, I'll repeat, this is, primary trend. If you go on social media at the moment, you'll probably see everyone fighting against each other with ideas of what's going to happen in the markets. After this move down, I'll just take the log scale off so you can see. In fact, I'll put the log scale back on and you can see the volatility. After this move down, the general consensus was volatility ahead. Now we've had something very normal, what we see before a market push up. We got the accumulation day, we got a kind of strange follow through day, and then we ticked up here, and this was kind of a low volume sort of follow through as well. But it was visible on a few markets. I like to see them. One market doesn't make a trend. So, we started this run back up, very normal run back into very normal area, what we expect. Mean trend back into resistance. Now, let's remember, these levels here are meaningless on the way down. They're not support. But, these bands of traded area can be sort of psychological resistance levels on the way up. It's not like stocks where everyone's got a position and they want to get out near break even, supply what's going to hit the market. In the actual indexes, it's more of a psychological thing, in my view. So, extremely normal. We talked about this in the daily radars, the chart repeatedly. you know, what can happen after a move like this. You can get this grinding channel, and you know, we drew these in all the way back here, and we said you can get this grinding channel action, and off it goes, and it's still going. Now, what we've seen just over the last few days is we saw, you know, a swing point to the downside off a very normal sort of area, mean trend. And my sort of view on when the market sort of puts that top in, you start to get, it starts to flip flop around with gaps, and we've seen a little bit of that. You know, we saw it here, and then we see it again here. You know, it gaps up, and then it gaps back down. Yeah, it could grind back into the channel and keep going higher. You know, that would be, you know, nice for the bull case. But in reality, you know, we're waiting to see what the bears have got and whether the bulls have got strong hands. That's basically what it's down to. And the next push by the bears is the one what will sort of give us some pretty good clues of whether this market wants to sort of hold the previous lows. You know, it could melt higher and then just put in a higher low, whatever. I know a lot of people call that a V recovery. It's just, you know, for it to be a V recovery, it's got to trade off into the distance. So it's a bit early to actually say that. You know, it could be down here in a couple of months' time, putting a higher low in, and then it would just be very normal action again. So, you know, the trend, primary trend is down. This is a very normal trade back up into a very normal area where you know, it would start to become, you know, the old 2/3 retrace, start to be a very normal area for people to sort of unwind again. Something we have noticed as distribution has been ruling the close, especially in the US. And, you know, I'll just flip this because another thing you can look at is volume, and I'll just flip the chart. You know, you want to see things move on volume and pull back on light volume for continuation. And basically, you know, move on volume, pull back on light volume. I'll just flip it. I've flipped it to the bull side because it's easier to sort of think of that as, you know, buying a retrace on a bullish stock. But this is kind of basically the same, you know, distribution, couple of accumulation days, good for a few swing stocks. But, you know, the USA was the place to go and find them. And yeah, a little bit more accumulation and very narrow range day into a very sort of thick area of sort of, you know, obvious kind of resistance zones start coming up there. Same again, high volume accumulation day. I know a lot of people calling that sort of a follow through day or something, but no, I don't think so. Narrow range day. Another thing to look at here, you know, we're in the bottom of this channel, and we've not made it back to the top of the channel, and we've tested the bottom. So, you know, this channel's starting to look a bit, you know, questionable. And the old consensus of volatility ahead. Well, you could call a move back into the range, a huge move off the lows of how many percent volatile. But in trading ranges, the volatility dropped. You know, you're seeing this melt up on very narrow range days in comparison with the market crashed from these lower levels. Big crash days. You know, big wide. This one gapped down, then crashed again. So these big loose levels, I mean, you're not seeing anything. We're not seeing any long range, you know, wide range bars since this day here. We've had over 3 weeks of very narrow range action. So still heightened compared to, you know, where the market topped on these really narrow range days. But it's probably half the vol of this area here anyway. So just think a few things to sort of look at there. Where are we in this market? Well, in fact, I'll just throw up the rest of the world, excluding the US. And, you know, you'll see this over and over again. US being the strongest, you know, this is the rest of the world. Pretty normal action, just a kind of, I wouldn't say painful, but it's kind of painful because it takes time, you know, watching this channel sort of grind higher, all the FOMO, you know, people getting the FOMO, and then we're going to find out over here somewhere where the markets are going, really, aren't we? I'll throw the 350 up. It's just the same on a lot of markets. You'll notice how weak we are. Extremely normal action. And I'll just throw the DAX up. You know, extremely normal action. Just a throwback after a big push down, and you've got some big levels here. You know, what would be a normal area for this thing to run out of buying pressure. It's the best way to put it. So, you know, it doesn't mean that's going to happen, but that's where we are. It's just big picture view. And, you know, the trend model doesn't lie. We've got a few defensives up, cyclicals on the floor, you know, trends down, basically running on empty. This measures how bullish they are. We go back to the actual markets. The only market trying to hold up is basically the Nasdaq, and you know, that's probably, if we're going lower, that'll roll back down again. A primary trend short, counter trend market was basically Nasdaq stocks. Nasdaq being the only bullish one at the time. Ticking on empty across the board. Have a look through these, see what's bullish, what's bearish. Pretty, you know, it's basically, yes, all trends will change with, you know, one market will tick up, then the next one will tick up, and it, you know, that's basically how it happens. But at the moment, we're just ticking on empty. So, you know, I think it's a time thing rather than a, you know, I don't need to know where the market's going. I really don't. All I need to do is wait for the long risk to tick up, and I'll just keep picking off the long trades. Is basically my game. At the moment, it's shorts. Okay.